Hi everyone, welcome back to my channel. My name is Phi and this is Money Philosophy. Today we will continue with our analysis in Tesla, and particularly we will talk about Tesla Q3 earnings preview. I will share with you guys my projection for Tesla for this quarter. Of course, it's going to be a blowout quarter and Tesla will beat every single expectation on the street out there, maybe except for Gordon Johnson's. In addition to that, I will also answer some of the state tax questions that I've been asked over the last few videos regarding Tesla's recent headquarter move to Austin. Stay tuned until the end of the video for the full analysis. If you are new to my channel, please consider subscribing. I am a growth stock investor and a trader. I particularly enjoy investing and trading in Tesla, and I'd love to share with you my investing and trading journeys. Without further ado, let's get right into it. First, let's refresh our memory on the total number of vehicles delivered for Tesla for Q3 2021. Tesla delivered a total of 241,301 vehicles. The Q4 number here is just my projection. So for now, I'm leaving it there so we can come up with the annual earnings per share. But it is not yet fine-tuned. I will fine-tune this number closer to December, January of this year. But the total number of vehicles delivered for 2021 Q3 is over 240,000 vehicles. And if you can look at this graph, you can see that the vast majority of that is due to Model Y and Model 3, with a little bit of increase in S and X. This is somewhat important, at least compared to the last 2 quarters, because Tesla margin is highly affected by the high margin vehicles such as S and X. I expect this number to increase again in Q4. For now, the increase is fairly modest compared to the last 2 quarters, but it's also important to note. I get my charts from hypercharts.co, so that might be something you guys are interested in. They have really good information in historical statistics. I put the link down below if you guys are interested. Feel free to sign up there. Let's also take a look at revenue by segment. So you can see here for Q2, this is just historical data. I have not shown my projection yet. The overall revenue is almost $12 billion, with predominantly auto revenue, and then energy, and then service, and with gross profit and operating income accordingly here. As you can see, very predictable that the revenue segment, of course, increases as Tesla continues operations. So for as of Q2, it is a very good record quarter, and I don't expect anything less for Q3 given the number of vehicles delivered. Let's take a look at OpEx. So operating expense is definitely impressive. This is very important for those of you who don't know well about manufacturing. To be able to reduce operating expenses in the hyper growth mode is substantially critical to continue scaling and profiting. That is exactly what Tesla is doing. This is attributable to both the Fremont and the Shanghai gigafactories, increase in efficiency. The amount of vehicles that it could pump out is very impressive, despite the fact that you have increase in depreciation. Tesla continued to reduce OpEx, which is very important. Let's take a look at net income. Now, this is a very impressive number. So as revenue substantially increases and OpEx substantially decreases, net income necessarily go up. So this is very impressive because it is more than double the quarter before. So this is Q2 and this is Q1 of 2021. So needless to say, 2021 is a very good year for Tesla so far, and I believe that it is only the beginning of multi-year profitability. Now let's take a look at the overall historical income projection. So you can see that as of Q2, here's all the numbers pertaining to Q2 is straight out of Tesla's Q2 financials. Once again, you see this R&D drop off here of roughly $90 million. And you can see SG&A also drop off by over $70 million here. So this is very impressive. Operating income increases as a result of revenue increases and operating expenses decrease. So let's take a look also at, in that sense, my revenue projections. So let's pay attention to just Q3 Q3 for now. I did have the average selling price increase a little bit because, as I mentioned, Model S and X make up the decent amount of volume this quarter, although not a whole lot, but Tesla also had a few price increase this quarter, so I have a modest increase in average selling price here for Tesla. Given the 241,000 vehicles delivered this past quarter, I project that the total automotive revenue is at $10.6 billion, with almost same as last quarter. For energy and service, we are looking at $12.3 billion in total revenue. Now, Q4 is a different story. Usually Tesla would go all out for Q4, so the bulk of the increase will go into Q4 as well. But the biggest number that we are focusing in this particular video is this $12.3 billion in total revenue. Then I would have the income statement projection. So the income statement projection, once again, this is Q3. I start with the total revenue of $12.3 billion and with a gross profit of over $3 billion due to the gross profit margin increase compared to the last quarter, and so on and so forth. So I increase R&D a little bit here. SG&A, I go back up to closer to Q1. Just to be conservative right now, I also increase the vast majority of the expenses modestly, and I come up with $1.2 billion in net income and over 10% in net income percentage. That brings Tesla to 1.27 in earnings per share. Now, Q4, once again, it needs to be fine-tuned closer to the date of release. But if I have Q4 here at another record quarter, Tesla is making about $4.80 in earnings per share for the year. That would put total revenue over $50 billion, almost $51 billion, and the OPEX expenses average at 11%, with the overall gross profit average at 24.43%. So once again, this is another blowout quarter for Tesla. I do think that Tesla could easily achieve this number. This is a particularly interesting quarter because it gives Wall Street a general sense of whether Tesla will likely meet or beat goal this year. Lastly, here is my Tesla stock price projection for end of the year 2021, with the assumption that total vehicles delivered would be over 943,000 vehicles and the average selling price at 45,000. For the year, Tesla would be at almost 51 billion in revenue, and net income is at 4.7 billion in revenue, with the ginormous year-over-year change. At 250 PE ratio, Tesla would be around 1,200 by the end of the year. The PE ratio for Tesla today is about 450, and the PE ratio for Amazon is 60. This is just for reference. Obviously, 250 is still high, factoring in future growth, but it has come down a lot from the end of last year, as well as currently at 458. So I think this is fairly reasonable. Of course, you can always adjust it down or up depending on the market perception. That would put Tesla at the market cap of $1.17 trillion by the end of this year. So a few of you asked me whether or not Tesla could save a lot of state income tax by virtue of its headquarter move from California to Austin, Texas. The short answer is yes, there is a little bit of saving there. It's not a wholesale or categorical exemption of income tax in the state of California. In fact, Tesla continued to be paying income tax to the state of California to the extent that it meets certain requirements. So let's talk about income tax. The first is whether a business should be taxed in the state. That is the concept of nexus. The second is how much of its sales or income should be taxed in the state. That's the concept of apportionment. And And third is a formula to determine the exact tax amount that the business would be paying. Now, apportionment works differently in each state, but in general, it is a weighted average of sales, property, and payroll. Some state would have double factor sales, triple factor sales, and some states just have single factor sales and nothing else. So it is very important that the business would calculate all of these sales, properties, and payroll based on its presence in the state. So let me walk you through something very quick here. So for example, this is Tesla hypothetical sales. I'm making these numbers up based on just general projection and hypothetical. There's no real number here, but the idea is to illustrate a concept, which is state apportionment, right? So here is the sales originating out of California and Texas, and here's the sales destination, meaning where would those sales be going to. So I'm projecting about $52 billion in total sales. For now, just automobiles revenue, just to illustrate the concept. So obviously, sales coming out of the California Fremont factory going into California the most, $23 billion here. So add another 3 zeros to the end. Texas sales to California is minimal, because the factory has not produced anything, but even by the end of the year, if it were to produce anything, it probably won't ship to California a whole lot. I have Arizona at 9 billion, Colorado at 6 billion, Florida at 2 billion, Connecticut at 1 billion. Again, these are made up number. They're not based on anything in particular. New York's 4 billion. Now, Texas, sales from Texas going to Texas is about 100 million, give or take. So Texas shouldn't contribute a whole lot this year. I don't know if this is even realistic, right? But this is just for hypothetical. So this, based on that, this is the sales factor. So California made up 44% of total sales domestically for Tesla already. So this number alone could dictate how much California will be taxing Tesla, regardless if Tesla moves its headquarters to Austin, Texas. The next one is calculating apportionment. So if you look here, this is the sales factor that we just walked through, right? So we take the sales for that particular state divided by the total sales. So for Alaska, for example, the apportionment factor is less than 0.001%. Arizona 17.2%, California is 44%, Colorado is 11%, and so on and so forth. So if we get over here, this is the sales factor. This is the property factors, and this is payroll factor. Again, I'm making these numbers up because hypothetically, Tesla would have service center in a lot of different states, and Tesla would have employees working as service professionals in different states. Now, if Tesla has a combination of both sales employees and service professionals, then all employees and all of employees' payroll would be considered as part of the sales factor. The exemption would no longer apply unless Tesla only have a handful of employees in a particular state that is solely for purposes of soliciting sales. So for example, in DC, I put the factor 0 here for property and 0 for payroll. So in Idaho, Tesla shouldn't have any property. Again, hypothetical, 0 employees and 0 sales here. So if Tesla has any sale into Idaho, that is the true saving because it would be thrown back into the state of Texas, previously thrown back into California. But we'll get to that a little bit later. So long story short, California is at 44% in sales, 45% in payroll, and 23% in property. So how I come up with these numbers, again, completely random, but I hypothesize that a big chunk of California employees will still be in California, and California Fremont factory will still be there, so it still account for a decent chunk of property. This is probably understated. Tesla probably have somewhere north of 50% of property right now. But again, just to illustrate a number. So then California is just single sales factor, meaning that it disregard property and it disregard payroll. It only counts sales. You can see Arkansas has a double sales factor on a total of 4 factors apportionment, right? With 2 being sales and the rest being property and payroll. So then you combine all of these factors weighted based on the overall weight here. And you get to the total apportionment factor. So in this particular example, California makes up 18% of apportionment factor. Texas makes up 13% of apportionment factor. So even though Texas has only 3.8% in sales this year, and this number will increase a lot next year, it also have property and payroll. Unfortunately, property and payroll is not considered in the state of Texas. So both California and Texas are single sale factor, meaning that it is blind to any other factor. It only cares about sales factor. So as you can see here, once again, my hypothetical will show that the apportionment factor in California is higher than the apportionment factor in Texas for now, purely due to the fact of sales. I expect that this number in California continue to lead because sales in California continue to lead over Texas until California sales subsided and Texas sales increases. That's where you can see a lot more savings at that point. What Tesla will also save though is in states where there's no income tax. So for example, you have Washington here that has 0 state income tax, right? So whatever sales that Tesla make into the state of Washington, in my example, 3.8%, similar to Texas, at least for this year, it will be considered quote Texas sales. So it will be thrown back into the state of Texas, and that's where the saving would be. Similarly, Nevada, which should make up a big chunk of the sales as well, right now at 1.9%. It is also thrown into the state of Texas. So previously, any state that did not impose income tax, Tesla would have to take those sales, put it back into the state of California, and pay state of California income tax. In this case, going forward, Tesla will be thrown back those sales into the state of Texas, thereby avoiding income tax. Now, keep in mind that anything Tesla saves from a income tax level could be offset by property tax level, because property tax in Texas in general is almost twice, if not more than twice as much as property tax in the state of California. And so if Texas doubled the amount of investment in Giga Austin, that is where the big bucks would be. Granted, for government agency, property tax is allocated differently from income tax. Tesla bottom line savings would be way less than people think. For perspective, the property tax expense would likely be included in operating expense around this line right here, give or take. Whereas the income tax expense would be somewhere down here for Tesla. So essentially, the presentation for the tax will be different depending on if it's property tax or income tax. But the bottom line, which is net income, which is the main calculation for earnings per share, would be affected similarly, meaning that regardless where the expense would lie, up top, it would still affect net income. So this is it for this video. Thank you very much for paying attention thus far. For those of you who love my technical analysis, I apologize, there is no technical analysis today. I'm filming this video before market opens on the 19th of October. I have to go into the office today, so I do not have any more time to make videos for the rest of the day, and I do apologize. But hopefully I'll come back for technical analysis tomorrow. Be ready for Tesla earnings after hours. Until the next video, bye.